I have no idea how social media works or what they even post anymore, especially as a financial professional. I see a ton of like financial influencers who are gaining notoriety and are saying, hey, I'm so-and-so and I'm a millionaire and I've done XYZ, blah, 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 blah. Basically just from what I've been seeing, it's just basically financial influencers are targeting the masses and typically targeting people who are going through struggles of some sort. And when someone's going through a struggle, I've been through my fair struggles, you're desperate. And when someone tells you they have an opportunity that can help you, then you're going to act. I mean, I remember when I first started the financial company, 369 Financial, back in 2020, I didn't know what I was doing. I attempted to partner with two people prior to that who had been in the financial industry for 20 plus years each, because I wanted to partner with someone who was older than me to learn from. And after both of those didn't work out, I was desperate enough to spend $5,000 on a business coach. And I was so excited about it. I signed up, I was listening to audio and all sorts of things. And ultimately, looking back now, I would never spend $5,000 on what I spent then. Did I learn a few things? Yes. Do I feel like the value that I received back is worth $5,000? Not from the person itself. I was able to extract the value by identifying like, hey, I need to ask better questions. But I was like super scared. I wanted to be successful. And I was like, hey, maybe if I learn from someone, it'll help me grow. And the advice I got was not worth $5,000. And I feel like the advice that people are getting nowadays is probably not worth the amount that someone is giving the money in exchange for those services. And that's where a lot of the distress is coming, especially in like financial advisors. I mean, people are like, why would I ever pay a financial advisor when I could invest into exchange traded funds, yada, yada, yada. And I mean, I'm guilty of it too. I've definitely created negative experiences for folks. And I always ask myself, like, why did it happen? And typically it happens when we don't have a good relationship. We're not able to communicate clearly. And what has always happened is we go through things, we set things up, we open up the account, and then we have no conversations around what to do next or anything of that nature. And that's where things typically go awry. And some of the mistakes that I've seen when it comes to investing, the one that stands out the most to me that I've seen through my experience is someone opens an account, they put in money, and then that's it. They're just expecting that money to do magical things, which if you look at like any investment chart right now, short-term traders, meaning if you started investing in like 2022 versus someone who started investing in 2021, you're actually doing better than someone who's been invested longer because of the downturn that we saw in the markets in 2022. So it is showing a lot of people like, hey, look, I started in 2022. I know what I'm doing. I'm making good returns. And then there's other folks who started in 2021. They put in $1 and that dollar turned into 75 cents. And they're like, oh no, investing is bad. And investing is not bad. It's just without any strategy, whether you're going through good times or bad times, you're not going to be able to see the things that you want to see when it comes to your financial future. Because can you get lucky and have good timing? Of course. Can you get unlucky and have poor timing with investing? Of course. However, if you know the fundamentals of investing and are able to have a strategy around it, you're able to, I think I learned this from like Manish Prabhai, the famous investor. He always talks about when you look at an investment, you want to have heads, I win, tails, I don't lose much. We're in like a really interesting period for investing right now. Anything that is AI, data centers has been booming. Everything else, not so hot. I think I saw something on Instagram that said if you took out AI companies and energy companies from the stock market in 2026, the stock market would actually have a negative return. So the big question that we're asking ourselves are, with AI and data centers, they're making good money. How sustainable is those earnings? Is it a what hit wonder song? I don't know. It could be like Who Let the Dogs Out by the Baha Man. Or is it going to be like the Rolling Stones? And they're going to be a company that's here for a long time and changes the way that we look at that sector. Time will tell. But right now it seems like things are a popularity contest versus looking at boring investments, boring businesses that generate cash flow consistently and continue to grow and grow and grow and compound over time, rather than looking for the high flying space things that are going on. So that's all I got for now. Bye.